this used to be much more expansive than it currently is. In 2017, there were some big changes that took place, the tax code, and it was changed and narrowed substantially to only apply to those members of the armed forces. And not just any member of the armed forces, they have to be on active duty. So members of the U.S. Armed Forces, their spouse or their dependents on active duty. Now the funny thing is, I mean, this is for expenses that the service member incurs in moving. If they're moving for the U.S. military, chances are the U.S. military is picking up the tab on all of that, right? They're probably not paying a whole lot out of pocket, maybe some incidental stuff. But this does exist. How much it's used, I don't know. I can't imagine that it would be used all that often, but so U.S. Armed Forces who are on active duty and they move because of a permanent change of station can deduct their unreimbursed moving expenses. Like I said, most of those moving expenses would be reimbursed or just paid outright by the federal government. What definition of a permanent change of station? A move from their home to their first post of active duty, so they're just enlisted, they're going to their first spot. Move from one permanent post of duty to another, and a move from their last post of duty to their home or to a near point in the United States. I guess maybe for spouses and dependents, there might be some expenses incurred, but certainly not for the service member all that much. Move must occur within 1 year of ending their active duty or within the period allowed under the joint travel regulations, whatever that is. So any reimbursements, though, that are made to the service member would have to be excluded. So let's just say, for example, service member pays out of pocket to move, let's say $8,000 of moving expenses. But they receive $6,000 reimbursement. Then their moving expenses that they can claim for purposes of this deduction are $2,000. So you got to reduce it for any reimbursements, the amount of any reimbursements that were received. So, one of the things that also changed, like I said, this used to apply to anybody who moved for the purposes of work as long as they moved far enough away from their original place, and they had to be like employed at that place of work, or at least employed full-time for a certain period of time after they moved. So there were some restrictions, but also what used to happen was employers would reimburse employees, like they'd move them. Say you work for Principal and you worked in Des Moines and they want you to move to Denver, to be in the Denver office. So they would pay for you to move. They would, they'd pay for the cost of moving all of your household goods, maybe any incidentals. Maybe some places would even pay if you had to sell a house, they'd pay whatever that realtor commission was on the house. And it wasn't taxable to the employee. It was like they didn't receive the cash necessarily, and they had the expense of moving, so they weren't like financially better off necessarily. They just were being moved. Well, now that is taxable income to employees. They have to pay tax on that. Not for members of the armed forces, but now for the general public. And it's included as wages on their W-2 for civilians. Let's see, so if the reimbursement is more than the actual expenses, so let's say they got $10,000 reimbursed, then $2,000 of that would be taxable. Okay, so that's over and above what their actual expense was. Let's see. Household goods and personal effects. So the expenses of moving the household goods, personal effects, including hauling a trailer, packing, crating, in-transit storage, and insurance. They cannot deduct expenses for moving furniture or other goods that were purchased on the way from their old home to their new home. Okay, so you can't like stop on the way at Homemakers and get yourself some new furniture. That would not count. You'd have to pay for that. You don't get any tax benefit for that. Also, storing, cost of storing household goods within any period of 30 consecutive days after the day the goods in effect were moved from their former home and before they're delivered to their new home. So if you have to store it in between up to 30 days, that would be included as well. Travel expenses. So if they have to pay out of pocket, maybe for airfare, or they drive their own car, then they get reimbursed for travel. They can take either actual out of pocket expenses, or they can use a mileage rate, which is a whopping 18 cents per mile. In 2022 it changed, and you'll see this when we get to the chapter 6 and talk about business income as well as self-employed business income, and we start talking about transportation expenses, travel and transportation expenses. In 2022, because the price of gas went up substantially, they changed the reimbursement rates or the federal mileage rates for a lot of these different deductions. And you'll also see that the business mileage rate is different from the moving expenses mileage rate, also different from the charitable contributions mileage rate, and different from the medical mileage rate. So we'll see these different mileage rates, but that's the reason it says 18 cents a mile for the first half, 22 cents a mile for the second half. That's because they increased it during the year. It doesn't happen very often, but it happens occasionally. It can go down if gas prices ever go down. Gas prices have gone down. They just haven't gone down recently. Parking and fees and tolls would be included, all that stuff. Expenses for the spouse and dependents as well. If a member of the armed forces dies, is imprisoned, or deserts, a permanent change of station for the spouse or the dependent would be included as well. So they're not going to hold the spouse liable for any of those actions. A move to any of the following places. There's a special form that's used, this 3903 form. Let's see, they give us an example of it. Yes, here it is. So it's a pretty simple form. You just total all your transportation and storage expenses, any travel expenses from your old home to your new home, so that would be like the mileage, which you would have to calculate then what the amount is. The mileage or any like airplane tickets, what have you, add those up, and then subtract out any amounts that you were reimbursed, right? If the amounts reimbursed were equal to or greater than the amounts that were expensed, then you may have some taxable income or you don't have a deduction, but if it's the other way around, then you got a deduction, okay? It's fairly simple. The moving expense deduction is fairly simple. Again, it only applies to members of the armed forces, only under limited circumstances, and the form itself is pretty straightforward. There's only like five lines on it. Questions?